Like we are live. Hello, Remixing the Narrative family and community. Thank you again, first and foremost, for joining us today on this Friday evening for our latest edition of our community town halls. And I know some of you all may be used to seeing my sister, Dream Agorum, on these live streams, but I thought this would be a good opportunity for me to jump in because today we have a very special guest and someone that I have had the privilege of calling a good friend for a long time.
Oh
Her
yeah.
name is Brenda Beltran. And so, first and foremost, Brenda, how are you today?
I'm doing well. Jermaine, thank you for inviting me on. I want to go ahead and thank everyone, especially yourself. But I'm doing well.
Good,
Well,
great.
how you feeling?
I'm well. I'm well. I can't complain this Friday. So, that means a lot to me too. But no, so yeah, let's talk a little bit more about what we're going to be talking about today. Let's talk about some of your credentials. So what are some of the things that you have going on and what do you do?
Yes. So, Jermaine, again, I want to thank you for the opportunity to speak on the platform. I think it's super amazing what your sister and you have been doing, not only on, bursting into books, but also by mixing the narrative of each individual. And it's all by education. So, me being here, finance is my topic today. And I've been doing it for over 4 years now.
Yeah,
I learned from one company and just kind of outgrew each company that I've been working with. What I specialize mostly is in personal finance and how to properly plan for your future, because that's one of the things you can agree that we're not really taught, right?
absolutely. That is something that I learned later in my life. That's another reason why I was excited to talk to you because this is something that we all should be planning, especially around the holidays. For like having a solid base and and having planning for the future when it comes to finances is very important.
Super important. And I think that that's what actually got me started. I had actually, my uncle passed away and I was in college. We were actually next door neighbors at that time. And it was a really bad scenario at home of trying to figure out how we're going to get my mom and, take care of the situation. So I started learning more of, okay, somebody's had a conversation with me. That's honestly how it started.
Hmm.
And that opened my eyes. I'm like, wait, my mom didn't teach me this. My parents don't know about this. Let me go ahead and dig a little deeper and look a little deeper. And one thing led to another. And now 4 years later, and I actually am, my focus is to educate the Black and brown community, because I feel like our community is the one that lacks it the most. So I'm
Right.
glad to be here, and I'm hoping that everybody, not just having a conversation with you, but being able to help everybody build their financial home today.
Absolutely. So how do you feel? You want to get right into it?
Perfect. Let's
All
get
right.
right into it.
All right. Awesome.
So, ooh, it went a little to the front. I'm not sure why.
Okay. Here we go.
There we go.
But that's how you know we live.
We definitely are live. So we're, as topic of conversation today is building your financial home, because I feel like it's super important. Even as young as you and I are, or younger, it's super important to get that started and know about it at an early age, right?
Absolutely.
But before I jump into that and the conversation, I want to talk about some of today's realities, because there's so much going on in the world that we really don't understand what's happening underneath everything we see, right?
Right.
And it's huge. And the lack of insurance protection that we have, not knowing how it works, and more importantly, not having it in our community, is huge. Gun violence is real in Chicago. We
Mm-hmm.
all need to make sure we have some type of coverage. But aside from that, Jermaine, you and I went to college. Like, we invested in ourselves in a way that they told us, hey, go to college, you're going to get a degree. And then what happens?
You come home with the debt. And it's interesting because recently we all found out that what we thought were going to be deferred indefinitely, what is it, February, we have to start making our payments again. So it's something that a lot of us had to plan for and weren't really prepared for. I guess I wasn't really prepared because I was just assuming that we never pay them back.
That's exactly what my thought process was. And it's huge, because I actually had a conversation recently with a mom in regards to this topic, and she's like, oh yeah, the government, they're paying for my daughter's school. I'm not
Hmm.
paying anything out of pocket. I'm like, do you know that you signed and you're going to have to pay that back? And she was unaware.
Hmm.
She thought it was free government money, and unfortunately, 44%, 44.2 million Americans have a high student loan debt. That's a huge amount because it's only increasing. And unfortunately, just like, well, I can't say for you, but for me, I was only guaranteed the debt, but that job was not guaranteed to make me no six figures. We
Oh,
never,
absolutely.
it was huge. But one of the things that gets me now, and it's for you and my future, is what Forbes said. Forbes is one of, they're known for money. They
Yep.
know something about money. And one of the things they said that this stood out to me is that Social Security is about to run out in
Mm-hmm.
3034. That makes me about 45 years old. I'm still young, no more Social Security. You would still be young too. A lot of
Right.
us will. So that means no more Social Security. And the only way that that's actually going to be possible for it to continue is if the Congress raises our taxes or cuts our benefits.
Mm-hmm.
Either way, it hurts the people. It
Is
hurts
it
both of
is
our
us who are losing out. That's very true.
right. And again, it's things that are underneath. We're not being told about these things. We're focused on coronavirus right now,
Mm-hmm.
but we're not seeing, the foundation of everything. So it's crazy, but hopefully we can guide some people today. And if you have some questions yourself, you're more than welcome to ask me as I'm having this, we're going through this conversation.
Oh, totally. I got you. Yep.
Perfect, perfect. But let's go ahead. We're building a home, right?
Mm-hmm.
So, what do you want to start with? Do you want to start with the foundation or would you like to start with the roof of this home?
Oh, so I'm picking between if it's gonna look good or if it's gonna stand up. I'm definitely gonna pick if it's gonna stay strong and stand up.
The foundation, right?
Absolutely. The
We
foundation is what's important.
Yes. But would you say that both of them are equally as important cuz you don't want
Oh
nothing,
yeah.
right?
Oh yeah.
And
But at the beginning, we need a solid foundation.
of course. No, I completely agree with you. So, what today we're going to talk about is two main things that we're going to need for our future: our roof and our foundation for our home. That's going to be life insurance and our retirement plan because we need to focus on both to be able to build our financial future, right?
Mm-hmm.
But I want to even take it back a little further on what we were taught growing up. When it comes to money, Jermaine, where did you put your money? Where were you told, let's save my money, I'm going to put it here?
So I was told to take my money out of my jar and put it in the bank. That's the first. Yep, that was the first thing that I was told.
And that's a lot of us. We
Uh huh.
always go resort to the bank. Don't get me wrong, I got a couple bank accounts, but that's kind of where we save our money, right?
Hmm.
And it is how can I put it? It's not a bad thing, but what's the interest rate when you're saving your money in there for one whole year?
And then, so it's interesting you say because when I first started banking, I didn't even understand interest rates. I just knew that if I had $1,000 and I wanted to have $1,000 tomorrow, if I put it in this account, it should be there. Uh,
Wow.
so
Okay.
yeah, yeah. So as far as the interest rates, I would assume. Well, I know now, just from experience, that you're not getting any real return because the goal of putting your money in the bank is for the banks to have your money. So
And
yeah.
man, it's crazy that our thought process was very similar. Let me show you what many do to what a few do, right? Because we're going to talk about that a lot. So it's crazy because a lot or many of America, we're the 90%, we're stuck between making less than 99,000, right?
Hmm.
We're under, but that's more than half of America. A few, the 10%, they're making a little, they're, the 1%, they're up there.
Right.
But I think it's all a mindset. It's what we were taught. At least to me, that was huge. And yes, I was taught on put your money into a bank account, to savings, into a CD. That's where we invested our money. What
Right.
the wealthy know is that they put it into mutual funds, real estate, and insurance, right?
Right.
Two totally different things. And the way the interest rate works, which I'm going to break that down for you too, is that the banks give us that 0.001%. I don't know what bank gives us a 3%, but CDs sometimes do. They can give
Yeah.
us a little higher, right? Few people, and I think these conversations stem from home, to be honest. Did you
Hmm.
have finance conversations at home, or like Thanksgiving dinner having conversation about certain things?
Oh yeah, but you got to remember when you're younger, I'm saving up to buy these shoes, So the money that I have now isn't. I'm not planning past tomorrow. You know what I mean?
Got it.
But as I'm older, I learned about CDs and different ways to invest because my priorities changed. So yeah, I think the conversations changed as I grew.
And that makes sense. See, in my house, it was similar to that. We would have conversations about what you're saving for, what you want in the future. But I think when I say the best way to save were those topics of conversations. Did you ever hear mutual funds, real estate, insurance in your at your kitchen table?
No,
And
can't say I have.
same here. It was crazy because I'm like, what's a mutual fund? What's insurance?
Hmm.
Like, how does insurance work? It was very new to me. But if you're having those type of conversations growing up, because I know a couple people who they've had those conversations at home. I'm like, damn, I wish I would have went to your house for dinner.
Right.
It starts at home and it starts with your friends and what they know as well. So 4 to 12% is, what you can get at higher interest rate.
Hmm.
The thing about retiring and what we're talking about is that unfortunately many of us, we're at age 62, we're still working and we're still renting instead of owning. I'm sure you've seen, and excuse if anybody's working at Walmart or any of these stores, but there's a lot of older individuals working out there right
Hmm.
now that should be retired, watching a novela and enjoying their retirement.
Exactly. Enjoying their older age. That's true.
I saw, it's really sad because I was at Walmart actually walking down the aisle, and this old man, he was so adorable, was sleeping on the cat food. He was like taking a nap. I'm like, is he okay?
No.
I knew he was okay. And I'm like, you can continue sleeping, sir. I just wanted to make sure you were fine.
Right.
Poor
Because he's
little old
working
man.
so hard.
It was sad, but it is unfortunate because that is the way things work. Now let me show you what that interest rate is, because that was new to me too. I learned it recently. I didn't
Hmm.
learn it back in the day, but the compound interest, which is really huge, is something that you learn how much return of rate you want to get back. How much money do you, if I put my money here, how much money am I getting back? So if you do, it's the rule of 72. It's
Hmm.
a perfect, it always works. And what it is that if you do 72 divided by the percentage that your money is growing, you can see how many years you're actually going to have to wait for your money to double.
And
Or
this is, and sorry to interrupt you, but this is something similar to just putting your money in the bank. Once you put your money in something that's going to compound your interest, if I'm right,
yes.
you don't really have to do anything to that. That's just going to, no matter what, the formula is going to let you know how much you'll have eventually.
Yes. I think the biggest difference is that would you rather put your money in a 0% or in an 8%? Like,
Mm.
how much, where would you put your money? Because, like I said, a lot of us are taught to put our money in a savings account, but the interest rate is seriously 0.001, maybe 1%.
Absolutely.
So if you see the math there, if you do 10 years, you're making, it doesn't make sense. I don't even
Yeah.
want to do the entire breakdown of this because looking at it at a higher rate only makes sense for us,
Mm-hmm.
right? It drove me crazy once I understood the rule of 72, and I'm like, okay, if I do this, if I do that. Now, mind you, a lot of retirement plans, you can get something that has an 8% rate of return, but there are a lot of other things that also make a change. And I'll go a little bit into detail when it comes to that. But basically, we don't want to just think that we're getting an 8% all the time. I'll
Right.
show you what I mean when it comes to that part here. And we're going live when my cat is bothering me. Like, I want some attention.
Oh, absolutely. I had the fight hours off too.
I'm like, okay, you understand? I am live right now. But to keep going, the cost of waiting is huge. Waiting too long to start even thinking about retirement. Let me ask you. Let me start here. When
Hmm.
you think of retirement, Jermaine, what do you think about?
Ooh. So, I think loftily, I think of some island, relaxing on a beach,
Okay.
just comfortable with the family, or with my family comfortable also. But I think that realistically, I don't know how that happens, and just kind of with things, they've just been working their ways out, and I've been getting a little more information about financial literacy, so I think I'm a little more prepared for that. But yes, retirement to me just seems like the promised land, you know what I mean? So at some point when I'm old enough to do this, I'll be able to just relax.
Okay. Before, and that's crazy. I wanted to ask a second question, but to me that was retirement too. Like I'm
Yeah.
like when I retire at 65, I'm gonna be in a beach. I'm gonna relax. And I guess my next question is, how long have you been saving for retirement? Because ultimately retiring means you have some type or sort of savings account built
Right.
up in which you are going to retire. Have you and not person, I don't want to get personal with you, but it's insane
Yeah.
how a lot of us really don't think about where, social security again, a lot of
Hmm.
us rely on that. That's not going to be there. So did you start building something else aside from your social security?
Yeah, and I no, and I think honestly, my experience is like a lot of people's, that I didn't consider retiring until I started working.
Okay.
So once I started planning for retirement was when I was actually working. So and then it just came as something that you sign up for. So hey, this is something that you do when you first start your job. Sign these papers. They'll take this money out your account, and if you leave it there, by the time you're done, you'll have it.
Okay.
I was in the military also, so it's similar. So it's just once you first start, sign these papers, they'll put your money away, and you'll have it when you're ready to be done. But yeah, I guess honest, I think I would say that a lot of people are like me, where you didn't really think a lot about it. You just knew that this is something your parents did, and this is something that I should do too.
Yeah. And that's exactly why I was asking those questions, because I'm exactly at that point too.
Hmm.
I followed in my mom's footsteps. I'm like, all right, when you get a job, you have to sign up for some type of 401k, 403b, a Roth IRA, something that leads towards your retirement. The reason I say that is because some of us individuals that are on a younger age, we tend to wait till it's too long. When we talk about retiring and making sure that you retire on time, again, it's a savings account. So if you start planning earlier, you're going to be putting less money in. So for
Hmm.
the example that I have right here, this is assuming that we want to hit 1 million of goal for our retirement, meaning that once we hit 65, I want to be at 1 million, and now I can actually be at the beach just like I want. Bills paid, parents are taken care of, everything is fine. And if you break it down on how much, if we wait, how much you're actually going to continue to.
Right. And so this is once again that rule of 72, compounding interest, you putting this money away and not touching it.
Yes, yes. And it's so much of, it sounds good. And especially with 401ks, plans that come from your job, I think it's amazing because they match it, right?
Right,
They're
right.
great plans that are matched. But that's going to take me into my next one. And my next slide. So I'm going to explain a little bit of, the rule of 72 is great, especially when the stock market can give you that 8%, that 12%. But if you look at this chart here, we're looking at a green line, a red line, and a blue line. I crossed
Hmm.
out the blue because we're going to talk about the blue. But the green line, that's where we put our money, right? The banks.
Right.
That's where we're known, like, all right, let's put the money in the bank. It's going to grow. It grows steadily. Your bank
Hmm.
is safe and it's giving you money back. But unfortunately, it's not growing rapidly, especially with inflation being what, 6.1% today
Oh yeah.
still?
Oh yeah. And it's about to go up, I believe, because Don't get me started. I was reading something about regulated. Yeah, I think it's about to go back up. Yes.
I agree with you there. So if you have your money in a savings account, it's not the best thing possible because although it's very safe, you're not building that money like it should because the interest rate is so high, right?
Right.
Another big thing that once we get a job, we're told, get a 401k, 403b, get some type of retirement where your job matches it. And that way you can grow your money. That's amazing because the interest rate there is really high.
Hmm.
But when you put your money into the stock market, how do you know what tomorrow is going to look like?
Exactly. And that's what I learned to understand, that the stock market is the long game. You
Yes.
put something in, maybe it drops, maybe it comes back up, But yeah, definitely. That is something to compare it to the bank account, and when it comes to security and knowing what's going to be there tomorrow, it's a little more tricky with that, I'd say.
It is super tricky. And I think it's super sad because in 2020, we saw this again when the stock market dropped. Anybody who was bound to retire or about to retire, unfortunately, lost a lot. The stock
That's
market went down 26%, if I'm not mistaken, in that time frame. Like literally, what people made in 4 years, they lost it like this.
unbelievable.
The president was in term for 4 years, and a matter of a couple of days, it literally got wiped out.
Mm,
It was insane. So I'm not saying it's a bad place to put your money, but at the same time, when we talk about retirement, we want something that's guaranteed. Would you say,
absolutely.
or or do or or do you want to gamble your retirement? Like,
Well, I plan on being on that beach at 65, so I want to plan on having that money there too.
okay, because you're gonna need that money too, right?
Exactly. Yep.
And that's exactly why I'm in business because I feel like that's what we need more of. We need more of those conversations because, like I said, this red line here, it's building, it's building, it's building. But yet, when it fell in 2002, when it crashed, when the market crashed in 2008, that was actually the oh my god, the that's when everything happened with mortgages.
Yeah,
So
the home mortgages. Yes. Yes.
yes. So when that happened, it messed up a lot of things. It just doesn't mess up one. It's a ripple effect,
Absolutely.
and it ends up affecting everybody's retirement plan. We just don't know what's happening underneath everything, the reality of it all, right?
Right.
So the blue line, I love the blue line, not because I'm in business doing this, but because it does build very well. As you can see, when the market fell, that like in 2000, the market
Hmm.
fell, but we stood steady. We did not go up. We did not lose anything. I'm guaranteed to keep the money that I have in there. I will
Hmm.
continue building, but I will not lose anything. The floor zero is my hero.
Mm.
So anything below that, I don't lose anything. I stay at zero, and I love it because a lot of us individuals just don't know that that's life insurance. Like
Okay.
that's what it does, and it's awesome that I'm here to talk about it and explain a little bit more of how it works. Right? It's an amazing feature. So I'll go through what I'm in business for. More importantly, because it's not just retirement. When we talk about retiring life insurance, these are the products and services that I help individuals with. So
Hmm.
I help with life insurance, I help with living benefits, fixed index annuities is one, that's retirement plans, and I also have other services such as debt solutions and legal coverage. So it's awesome how well rounded my agency is of being able to help individuals with all these things. Of course, we just talked about life insurance, and I'm going to break a little bit more of it down.
Right. Right. And
Right.
so, what I've been coming to understand, your insurances is how you begin that generational wealth.
Yes, that is a huge, and maybe I needed to make it bigger and say,
Yeah,
yes, life insurance is the way that you want to start. That's your foundation.
I think
That
that deserves a banner. Generational wealth.
life insurance. Yes, that's definitely one of those things that is highly important. And like I said, it's the foundation of your home because if everything else fails, if the roof falls, you still have the foundation.
Absolutely.
If somebody breaks the window, you still have the foundation. And when I
Yep.
talk about the roof falling, that just means, somebody got sick or that means that the window broke in this home, in your financial home. That means somebody passed away, but
Right.
you still have insurance. Everything is ends with insurance or begins with insurance, right?
Absolutely.
So
That's
I'm a break.
that's your safety. That's your safety net.
That's the safety net. And
Yep.
there's different types of insurances. One of the things that I appreciate the most, because like I said, I've been in business for 4 years, but I recently became a broker. So instead of fitting one size fits all with my clients, I'm able to work with 15 different companies to insure. So I'm one stop shop. You're
Mhm.
able to come to me and say, hey, I want to make sure my financial home is all put together. What can I do? And we have a conversation. It's a little bit more in depth. I find the insurable need, what exactly that individual needs, and I'm able to go ahead and do my research for that person, for that family. Because again, we don't all wear the same shoe size, so we don't all have the same financial need, right?
Right. Very true.
So I fell in love with becoming a broker because I'm able to help and have different conversations. Most of my clients became family. Like I'm going over their homes. We're at parties together now just because it was more than just a transaction. It became like I'm protecting your legacy. I'm
Absolutely.
protecting your family, and it's an amazing feeling.
And that's why I'm glad we're able to have this conversation
Oh yes,
because
oh
these are
yes,
things that we all need to hear.
definitely, definitely. And you know the crazy thing is that when we think of the word life insurance, Jermaine, I'm going to ask you, what comes to your mind?
Um, Death, to be honest.
Death.
Think
Okay.
yes. So making sure that my family is taken care of once I'm gone.
Okay. What else
Yeah.
comes to your mind?
Shoot. Other than that, man, maybe just like a not necessarily a need. I didn't really understand how much of it was a need for me, and a way to save money or not to make your money grow, as into recently. So, yeah, just like extra maybe
Okay.
something on the side, kind of like car insurance, you know. But
And
yeah.
you know what's crazy that you mentioned car insurance? I'm gonna interrupt you. Car insurance is one of those things that's mandatory. You don't
Right.
have life insurance, you're gonna get a ticket. They ask for so much more, right?
Hmm.
Why isn't life insurance something that is mandatory?
Yeah, some places won't even let you rent unless you have rental insurance. So yes, I
It's just
agree.
like leaving the hospital with the baby as well. You need a car seat.
Right.
Like and I guess I'm gonna take it a bit further because we even have our cell phones covered.
Uh
Pay
huh.
$13 covered, and it's a piece of plastic. Yet the most valuable thing that we have, which is considered our life, we fail to protect, right?
Right. This is true.
But let me show you why a lot of us, I think it's a huge misconception about what life insurance is, how it works, and more importantly, because it has evolved, right?
Hmm.
Just like our cell phones did. Did you used to have a razor?
Oh, I had all of them. I had the flip. I had the razor.
I
Yep.
used to like the one that flipped and you were able to text. It was like a whole keyboard.
Uh huh.
That
Yep.
was my favorite. But
Don't talk.
just
What aging ourselves?
I
Well,
know
let me relax.
that those were good times.
Uh
Now
huh.
we're either debating on iPhone or Galaxy or
Hmm.
Samsung. Like you got a Samsung, yeah, camera's good, right? And then everybody loves iPhone.
Yeah.
It was a huge change for me, but it has evolved is what I'm trying to say,
Hmm.
that it's evolved so much that life insurance as well has evolved tons. Let me show you how the new life insurance works. So this slide here goes through one of our three top products that I'm able to provide you with. Term life insurance being one. Maybe some of this is a refresher to you and a lot of people, but I
Hmm.
do want to go ahead and break it down for you guys. It's super simple. A kid can go ahead and go ahead and understand this. So term life insurance is something term. The longest that you can get term life insurance for is 30 years. So
Okay.
the great thing about it is that it's super affordable. Unfortunately, it does expire. We're here for a term. Think
Mm.
of this as renting a home.
Got
You're
you.
renting it, you don't keep it, right? Every month you're paying into it, you don't keep it. Now, one of the things, Jermaine, that I want you to keep in mind is that you don't purchase life insurance with the money that you pay. You're actually purchasing it by you being approved with your age and your health. So it
Okay.
depends how old you are. It also depends how healthy you are, that the insurance companies are going to say, okay, this person is approved for this much of money.
Which is why we shouldn't wait.
There
Absolutely.
we go. Which is why
Yeah.
we shouldn't wait. We should get it the earliest, the earliest you can, because you're
Yes.
the healthiest, you're the youngest right now, right this second,
Hmm.
right? When I tell you that the wealthy, that 10%, they put it on their kids at 15 days old. Would you believe me? Like, I'm like, I wish my mom had a policy when I was that young.
That's something that, yes, I think that's something that that, like I said, I learned later in life.
Yeah.
And then I also learned that people who are wealthy knew this already. So yeah, I
It
do believe you.
they had a conversation somewhere. They learned from their mom, their grandmother. Unfortunately, not I,
Hmm.
but I did get it earlier. I'm going to show you how that plan works for a 15-day old, because it's super amazing and super affordable. I and just, for kids. But here, let's say we have, we're doing a term policy, and this woman, she's a healthy 34-year-old woman. We give
Hmm.
her a policy for 500,000. That's her death benefit. The death benefit means that if she were to pass away between the ages of 34 and 64, when she's covered, the family would receive that amount of money,
Gotcha.
right? And that's super amazing to be able to have that, because she's only putting away $30. That's pennies for dollars, if you ask me, to
Right.
know that I'm covered, my family's covered. Like I said, this is not something permanent. It's like renting a home. But more importantly, I think new families, that's more dedicated for that. That's the type of individual that would get a term life insurance. Somebody who just recently became a father, who has a 1 year old, 2 year old at home, that he's the breadwinner or she's the breadwinner of the family. And if that money is no longer coming in, that we know at least we have some money to, the family can be okay if I'm missing, if I'm no longer here, right? But I'm going to tell you another huge benefit after I explain all of this, that this is why you should have life insurance, right?
Okay.
I'm gonna hop into number two first. So number two is another great policy that stands for return of premium or return of payment.
Okay.
This one is refundable, but it is term, so it does expire, right?
Gotcha.
We have the same 34-year-old healthy woman. She gets the same policy for half a mil. Here, she's putting away a little bit more. She's putting $100 into this plan, right? But the great thing about it is that if she passes away within that period of time, her family gets taken care of, right? If
Hmm.
she outlives it, so I come and knock on Sally's door at age 64 in a day, and I said, happy birthday, Sally. Is all your return of payments. So everything that you paid into this policy, I'm bringing you a check for $36,000, meaning you were covered if something happened to you. But if not, all the money I paid into it comes back to me,
All
tax free.
right. Right. That's
Okay,
that's I think that is the key word. Tax free.
tax free. That is huge, right?
Yep.
And what's crazy, that a lot I learned in this industry is that if anything that comes from the life insurance industry is not to be taxed, because the
Okay.
tax code 7702. You can check it out, Google it, but
Yeah.
tax code 7702 states that anything that comes from the life insurance, you don't have to pay Uncle Sam for it. That was huge to me. I'm like, well, why wouldn't I put my money in the life insurance then?
Exactly.
Wealthy knows something we don't know. And now it's like, no, let's bring it back to middle class America, right?
Yeah.
So let me go into permanent, because permanent, we're going to live forever, right? We're going to live forever.
I like to say so, but my body's breaking down as we speak. I'm fighting a cold right now, so
Oh no,
bring
I
it.
hope you
Yeah.
feel better.
Thank you. I appreciate you.
Yeah, well, look, permanent life insurance, in case you live to 121 years old, that plan is going to cover you. So that's
Okay.
that's a very long time. The great thing about this one, it has the death benefit, it has living benefits, and it has cash value. To be honest, all these policies have living benefits, and I'm going to explain to you what living benefits is.
Okay, that was my next question.
Okay, I'm gonna know. I was saving that for last, because honestly, this is why everybody should have the new life insurance. Is only because of the living benefit. Not only, but primarily because of the living benefits.
Okay.
So with living benefits, and then it also accumulates cash value. Cash value is like a savings account within your life insurance policy. And we that's for simple terms, right?
Okay.
So, for example, this individual, again, 34-year-old woman, she is putting $200 on a monthly basis. Some of this money is going to the cost of her death benefit. The other portion is going to the cash value bucket, meaning that it's compounding between 4 and 11%. That goes back into, remember, that compound, that rate of return, how
That
much
rule of 72.
that rule of 72.
Yep.
Here it's actually showing you how much you're going to be compounding. So when I sit with the client and they want to structure a policy so they're able to retire, I can guarantee them that they will retire with that amount of money that they want in there. And that's a beautiful thing, because we're, although it's tied into the stock market, S&P 500,
Hmm.
it's only it's only capturing the gains of the market and not the losses. When the market loses, the insurance company guarantees you won't lose anything. But when the stock market increases and keeps going up, like it should after, I want to say mid next year, I think it's going to crash some more. but when it's crashing, you're not losing your money. Your money's safe in there. It's like, oh, okay, cool. Time's passing, but I'm not losing anything.
Yeah.
When the stock market starts increasing, your money starts building up. So again, let's say, I tell my clients that this policy is not no get rich scheme, nothing like that. You're not going to put $100 for a year straight and have that money. We're looking at plans for 10, 20 years from now. What do you want to do? So
Right.
remember, I said I was going to show you how individuals, wealthy individuals, what they do for their kids. They get a permanent life insurance policy for their kids, specifically called an IUL, Index Universal Life. And this policy, at 15 days old, they start setting $100 every month for this 15-day old, I'm sorry. And it continues. So when the kid comes back and he's graduating college, I have money in this account so I can just go buy them a car, or I can, have you ever seen these
Yes.
individuals that have really nice things? And I'm like, wait, you just graduated high school. How?
How can you afford that? It's because their parents were prepared and they had those conversations.
Yes. And the money was there from the beginning. We planned for it from a while ago. It wasn't something that, okay, my kid is turning, 18 and we got to throw, or quinceañera. Us Latinos like to
Hmm.
throw quinceañeras for our kids. If I started planning 15 years ago when she was 15 days old, I now have the money to have that big party for her without any concern, you know?
And honestly,
Without,
I think that's what it is. It's not being reactionary. It's
there we
it's
go.
it's planning from the beginning.
Yes, proper preparation prevents poor performance.
There
Like
you
we
go.
want to we want to make sure we have a blast of a quinceañera and not ask everybody to pitch in. We have to plan when she's 15 days old and kind of say, "Hey, she's here. We know it's coming." Same thing when we want to retire. Hey, I'm already working. I'm in my 30s. I
Hmm.
know I want to retire. It's coming. No matter
Yes.
what, time is ticking for us, right? But in closing, I want to leave this in closing with why life insurance is important for somebody like you and I. Jermaine, do you have any kids?
No, I don't. I
Not
don't.
yet, right? I,
Not
I had
yet.
I had to ask because we speak, but I don't know. Sometimes
Yeah. Yeah. Not yet. Not yet. Not yet.
okay, but they're coming, right, for the future.
Yes, that's the plan. The future is the plan to have
All right.
children. Yep.
Perfect, perfect. But the reason I say that, or I ask that question, is because a lot of individuals, many of us, our age, believe that we don't need life insurance because we don't even have a family that needs us, or no,
Right.
that we're really taking care of.
Right.
But Jermaine, do you think you need to take care of you?
I don't think that I should have to take care of me when I need taken care of. You know what I mean?
Oh,
Yeah,
okay.
I think that, well, maybe I rephrase that. I think when it's time for me to be needed to be taken care of, I don't want that to be a burden on my family. You know what I mean?
There we go.
There you go. Maybe
You
that came
hit
off wrong.
okay. At first, I was like, oh, okay.
Yeah.
But you hit it right on the ball. You and me are actually thinking the same thing, that if something were to happen to us,
Right.
or, either way, what Jermaine does helps Jermaine get you go to work day in and day out because Jermaine needs food.
Right.
Jermaine needs to pay the bills. We need to pay the phone bill and live the lifestyle that we want to, right? Now, if something were to happen to you, what happens to the lifestyle and the bills? And when I say something happens to you, most of us think, okay, I'm going to pass away. But have you heard of somebody who suffered from a stroke, a heart
Mhm.
attack, who got hit by a car and they lived through these scenarios?
Mhm.
Cancer is huge. Yet, we've been learning and combating through these stages, and people outlive these battles, right?
Absolutely. Yes. Life does happen, and those unfortunate events do happen.
Yeah. And it's crazy because we're not prepared for those either. But if we had something in place for that, such as a
Mhm.
life insurance policy, is that something that you think would interest you? Like, man, if I'm able to take care of anything, including
Absolutely.
my health, that would be okay. Because that's what this new life insurance has. It has a feature called living benefits. And the living benefits, these are a few scenarios of individual success stories of individuals who actually made it through or helped somebody make it through their situation. So, for example, Christian Ortiz, he's actually one of our agents here, and he got a policy on his mom. And it wasn't even a couple of years into the policy. I think it was literally a year and a half where she was diagnosed with breast cancer.
Oh
And it's
no.
this super sad story because, I can't even say it was super sad. It's a sad situation. It was a great story because of the life insurance, she was able to receive $40,000 tax free again to be able to help her through that process.
Great.
Meaning the mortgage was paid, the bills were paid, the phone was paid, the card note was paid. Anything like the goal here is to take care of your health.
Right. And
No,
and and that is just, and that's one of those worst case scenario, if they weren't prepared in that way, like I would assume most of us are
right.
unprepared in those type of situations,
Yeah.
uh what would have happened to them, what type of help, would they have had. So yeah, absolutely.
Oh yeah. And that's one of those things. That's why I asked you about yourself. You currently don't have any kids. Neither do I.
Mm,
It's in the future, but I always think, if something like that happens to me, am I prepared? Because if it does, who I fall under, my mom. Me and my mom are super close. So if
mm-hmm.
something happens to me, she's right there making sure I'm okay. I'm sure all parents are like that, making sure
Yeah.
their kids are okay and taking care of them the best possible. But if I'm not able to do 2 out of my 6 daily activities, like take a shower by myself, or any eat by myself,
Yeah.
and my mom will be right here with me taking care of me. That's not something I want. Or we have
Right.
to have a nurse taking care of me. And I say me because I don't like speaking that into anybody's existence, but we all have to think about these things, because we don't wake up in the morning and God tells us, hey, you're about to get a stroke, a heart attack. And
Yeah, we aren't
no,
invincible.
we're definitely not. We're definitely not. This story at the bottom, this individual, he's also an agent. He's a father of five, right? The breadwinner of the home, and he suffered a severe stroke. His oldest daughter found him on the floor.
Jeez.
When I say again, another crazy story. Him and his wife are in business now. They're actually agency owners, because the company, the policy itself gave him over 250,000 of living benefits for him to do as he needed. So he didn't have to worry about nothing else. He's taking care of his health, the most important thing that he has to take care of. And as a breadwinner, his wife didn't have to go back to work. She
Right.
didn't have to, do the impossible to make everything possible. So they're an amazing story, because now you see him in the office, and although he's still recovering, and you can see that, there was some damage done during the stroke, he's doing all right. he's with us, right?
Right.
Then we also have other success stories in the company that, we start sometimes policies for babies, for little kids, just because we know that we want to in the future, college plans, savings plans, anything like that. Well, this little 6-year-old boy, we started a policy for him for a college fund, and unfortunately he was diagnosed with brain cancer. He's still
Mm.
with us, but the family received a check for 450,000 to make sure that
Excuse
and
me.
everything was paid. These are only a few success stories, because I also have stories where there were kids that didn't have the proper funds on time to take care of any surgery or anything like that. So
Yeah.
these are just the success stories. I have one that I was so happy yesterday, because one of my other agents got a policy for her mom, and it got paid out yesterday. It got approved and paid out for 150,000 when the mom got a stroke. Like I said, me and my mom are best friends, and
Right.
I know that if something happens to her, I'm right there.
And that's your investment doing what it's supposed to do.
Yes. Oh my God, yes. Being able to provide that check to them and say, man, worst case scenario, I'm here with some relief of
Hmm.
like, okay, at least I have this. Let me, take care of what I can take care of, but I'm not worried about the finances.
Right.
So I'm excited about it and where I'm going. I hope that everybody took some good value from the
Yeah.
information I had, including yourself.
Absolutely. And I'm excited that we got to sit here and talk for over 45 minutes.
I know.
So you said this is something that you do. So where are some places that people could connect with you outside of this live stream? I'm sure some folks who weren't able to tune in live, they'll be able to go back into the comments and leave some questions if they have them, or anything along those lines. So where's a way that people could connect with you later?
So yeah, perfect. I was actually writing it on the side for you. Um, we're on
Got
the
you.
banner. It should be popping up shortly.
Got
But
you.
for Instagram, you're able to follow me. My name is I'm Talking B.
There you
Crazy, but
go.
I love, and I haven't changed it. And then Facebook, it would be my full name, Brenda Beltran. I can also provide my personal number. They can give me a call. That's not a problem, and that goes directly to me, so we can have a conversation. In most cases, it's case by case scenario. So if anybody has any questions, then I would say reach out to me via phone or um, Instagram or Facebook, and we can have another conversation and go more in depth about it.
Well, yeah. Well, then, how about this? I'll say if anyone has any further questions that they want to talk to you about, they can put them in the comments below, and we'll make sure that we'll get them to you.
Yeah,
We'll get you their contact information and everything, and we can keep building this generational wealth,
I love it.
sharing the nuggets that we learned along the ways that we wish we'd have learned when we were young.
Oh,
As
yes,
soon as I have my kid on day 15, we get in that life insurance
you definitely.
policy.
As soon as you're at the hospital, I'm like, I'm coming over, right?
Yep, yep. Where do I sign? Well,
Awesome, awesome.
well, Brenda, thank you again. I hope you have a great rest of your Friday, the rest of your weekend
Friday
also.
evening. Yes. I want to thank you and your sister for the platform, the being able to be on here. I love and congratulate everything you guys are doing,
Thank
specifically with remixing the narrative, because I feel like with this information, if people tune in and really understand these conversations, we're about to change many people's narratives.
And
So
that's what we want to do.
kudos to you and your sister, and thank you guys again.
All right. And so we'll be talking to you soon. And so the rest of you all, thank you guys for tuning in. And until the next one, I think the next one we have will be with artist Simone Yill, where we'll be talking a little bit more about her art and how to make money off of your art. So thank you guys for tuning in and have a great rest of your day.
Bye, guys.